Shabby FSO, let's look at silver on weekly time frame. We've actually looked at the structure before, but we want to look at it again, and we'll draw a price action from 2020. And the idea behind this is to see the true direction of the trend, and it turns out that silver has been bullish since 2020. The price of silver rose from $11 to close today at close of Friday 30.620. So we can say it's bullish. Looking at the structure from weekly time frame, you will see that the industrial revolution, especially the PV, the solar panel production, and so many other industrial complex manufacturing, especially in military hardware, they have sought the services and you know of silver in many diverse forms. So we'll continue to see industrial relevance of silver, especially in military complex grade equipment. Silver has become of industrial value. So based on that, we are forecasting that the value of silver might skyrocket. And when we look at it from the chart, it's evident that silver most likely will continue to surge. It will continue to surge. Now look at the structure. Here we have price here in 2020, and then we have another push into 2022, and a similar push where price from the double to the bottom, a bullish price action, and the market has moved from there. In fact, the first touch or second touch create an ascending trend line, and when price return again, it's an automatic buy. When you return in 2023, it's also a buy. And this line remains valid. So in the future, if price returns, it will also be a buy. The reason is because what some of these people call other block. Yeah, all this is our grammar, but I'll tell you, this is a buying trend line. It's an institutional trend line. And if you are in doubt, look at it. When price return here, it's a buy. Meaning they have already mapped this line and kept it, and they already know when price will reach it, and that's when they want to buy. Now they are building buy liquidity. That does not mean they cannot break the structure. Price can come here now, go like this, and be going down. So all the longs, they turn all of them to selling. This is what price and market is all about. This is what it's all about. So it's all about it's dynamic in nature. And, at one point, you think you know what you're doing. At the other point, you find out that you're just a beginner. So it is what it is. It is what it is. Let's get this thing. See, let's get this. Let's get this. You have a price action at this level. You have the price action at this level. Let's first of all let's find our roof. This becomes our roof. So in the future, if silver go missing, this is your roof. It's important to find your floor and your roof. Very, very important. So that means that silver have a long way to go, that the price will continue to surge until it gets to the roof. That is when you have a buying position. So at this moment, the structure is set. Now we have a floor and we have a roof. So these are the floor and these are the roof. This is your roof, this is your floor. And from the roof, we've established one point, and we have 4 points on the floor. So then let's also see that there's a break of structure. Silver has been downtrending for a very long time until we have a break of structure at the ascending trend line. We have a bottom trend line, also an important price action from like trading silver. So you must take note of this. And we try to avoid cutting the body of a candle when we are going to trend line. Try and avoid it. Whenever you are running trend line, institutional trend line, don't cut the body of the candle. You see the way they have adopted a new roof. So every time price comes here, it's a sell. Every time price comes here, it's a sell. So all this represents the sentiment and emotion of buyers and sellers, how they feel. So it may be a high, but an investor may choose to buy high in anticipation that the price will go higher. So sometimes it doesn't necessarily mean that if price is high, you can't get into the buy. It can be high and you still go higher. So this is what we have, and the price playing a descending trend line. I will have a breakout in March 2024. Official breakout, there is no retest. There is no retest. Price just broke out. A heavy bullish candle left this structure without retest. So what does this mean over time? That most breakout does not come for a retest. So it makes sense that you don't always think that when there is a breakout from a descending trend line or from an ascending trend line, there must be it's not a must. It's not a must. There is nowhere it's written that it must happen. There is nowhere. And when we go back and check, there's a fundamental analysis, there's a fundamental data related to this very candle. So we'll go back and check. So let's put our vertical rule so that we'll check in this week, April 2024. We'll see the fundamental analysis that surround this day and the trading section. I want to know what trading section creates this volatile trust out of a descending trend, whether it's London session, whether it's New York session, whether it's Asian session, whether it's Sydney session. I'm interested, I want to know. So now what we are looking at now is that you see price is at imbalance level. It's at imbalance. It's not going to the roof, it's not going to the floor. So we need to be a little bit technical in this case. So our technicality will lie on finding another price action on weekly. So let's see, we're going to make some corrections to our structure. The most important thing we want to maintain is that we don't cut the body of a candle. We have a break of structure at this level. We have price create here, a resistance structure, and a break of a structure and a retest. So we are going to adjust this. We're going to adjust this. This is the price action. And so I hope it suits us. We are doing what we like. Let us have So now what we try to catch is the price action, and we try to not cut the body of the candle, but we can cut the wicks. We can cut the wicks, but if you move away from weekly time frame on this structure and go back to daily time frame, then the analysis will have issue because you'll be cutting the body of the candle. And when we get back to daily, then we'll have to make a new chart because a weekly candle cross is different from daily candle cross. You see this week, you see here, you see this week, if you go to daily time frame, this is not a week, this is a body of a candle. The same thing with this, the same thing with all these things here. All these here, if you check it on the daily, this is a body of a candle. All these weeks here, body of candle. If you don't see that body of a candle, check back on intraday, you will see it as a body of a candle. So our strategy is to try to avoid cutting the body of a candle. I've seen the implication of cutting the body of a candle. I prefer the weeks so that my trend will actually look out for break of structure. And my break of structure is break and close. It's either an outright breakout. I want to see an outright breakout or break and close. So it's either it breaks out, I come back for a test on break and go. So if it breaks and go, fine, it's okay. There is no problem. Just like we have here, it broke the structure and left, no retest. It didn't come back. There's no retest. So if you are praying for retest, forget it. It's not going to come. It's gone. So yeah, sometimes when you get into a bad trade, find a way and come out. I've seen it over time. You're thinking the market is going to turn in your favor. It will never turn in your favor. So those who are thinking the market will return here because the market is building a sell liquidity, what they were thinking in their mind is that now the price of silver is going to fall to the point that it will come here, break the structure, and continue to sell. That didn't happen. If that had happened, then your buy zone would have been here. Here would have been your buy zone. Here would have been your buy zone. Because at this level now, you will find out that it's now a a floor where market has created a double bottom and bought. So market will likely return there again and buy. So that didn't happen, so we don't need this information. It's more important to what we are doing now. What we are trying to see is where next price is going from here. Now the next thing we need to look at is let's to see. Now let's clone this structure. Now we have gotten a structure, and now we want to clone it and see what price have done. Now we have another clean price action at this level. We have here break of structure. We have here retest to a broken structure. We have price here from a double structure and also a retest and a breakout and is a retest. And finally, price came back and we have to adjust the structure because we have an M structure at this level. Yes, now we are right. Now we are right. And if you switch back to your line chart, in case you are confused, you go to your line chart. Line chart will give you touch, a clear touch of a breaker structure. You want to see where structure is broken, go to your line chart. You will see it clearly. And this very chart has been looked up in line chart. So it's not just come and say what I do not know. I've checked it on line chart before and I see it clearly. So you see in this case now we have here as a demand floor, break of a demand floor, break of a demand floor after price testing. Price came again, broke the supply roof, now retained and started respecting structure. So respect of structure started in May 2020. That's where structure started being respected. You will see here when price returned at the same level, it's a continuous buy. Why did he buy? Because price initiated buying structure at this level, and when he returned, he tried to buy but by got stopped by a break of structure, which is a broken support floor. If you look at it, you can see the structure. This is the structure that stopped that price from further upswing at the first time until it had to go down, pick liquidity, and now uptrend. You can see the structure, break of a support floor, price came retested and continued, bearish continuation, bearish continuation. Then picked up liquidity, then go back. Then when it returned, it started respecting structure. So at this level now, you see when price returned, it respected the structure, and when it returned again from the W structure and okay. When price return again, it respected the structure, and we have here break of a demand floor. And break of a demand floor, price rate trading below supply, below demand. That means now price is on supply. And when price return here, because this is trading below that supply itself. So when price break out from a demand floor, a broken demand floor becomes a supply roof. So for every time price goes up, there's a very high tendency that price will go down. And if you check your MACD and other indicators too, we have also looked up these things on several indicators to see how price react. If you look at RSI divergence strategy, you see this bearish curve. You look at your MACD, you also see your MACD tending towards sell. But the reason we do not use indicator is because it's misleading, very, very misleading. So I know a lot of people use it. I don't criticize it. It's your choice. Do what you like. So you see, when price return here, it respected the structure and we are here for a sell. Why did we sell here? We didn't sell here by error. We said here on double confluence, we had a descending trend line meet an ascending trend line. On the ascending trend line, we have a breakout of structure here. And price came back here and retested and broke the demand floor, turned the demand structure to a supply roof. And price have come here, test this roof sell, return again sell. And when we come for the third time, one, two, three, we sold at all the keys on the supply roof. So this is how market is arranged. The sentiment of buying and selling is well programmed by liquidity providers, by hedge funds, by whales, by market movers. So they follow structure. They don't act randomly. They are not random. So now when price came, we respected the structure, then picked up liquidity because we already broke out from the descending trend line. So breaking out from the descending trend line is already on impulse leg. The trade is already on the impulse leg, even from the floor. The impulse leg started from the floor, where we have first touch, second touch, third touch, fourth touch. And we came back again, still within the zone. In fact, if we want to make it smart, we make a zone. Look at the body of the candle, look at the wick. This should make a zone. So that if price gets into that box, your buy order should be triggered. That is how to make a zone. It comprises of body and wick. So you look at on the weekly time frame, then find out where there is break of structure and find out where there is buying pressure. Our strategy is do not cut the body of a weekly candle. If you cut the body of a weekly candle, be patient, allow the market to marinate. If the market marinates, then you begin to see respect of structure. You see, like we have here, To an extent, we have disrespect of structure until price recalibrate as their respective structure. Then we come in and make analysis. So you see what happened here. This is a very clean structure, very clean, no disrespect, no disrespect. Here, price here, supply roof sold, picked up liquidity. And at this level, you see you have a very strong demand floor at that level. At that level, you have a very strong demand floor at this level. So let's look at it. You can see the roof here. You can see the roof. The final week, it picks the week, it picks the week, it picks the week, it picks the week. So that's also another zone we can make out of that level so that every time price returns there is a potential buy. So you said this is a weekly trade. So if you put in a buy here, you don't need to watch it. Because if you watch it within the week, it will pull you back and you can rush out of fear and close your trade. Just for you to see around Friday or around Thursday, the buying will go and claim all the weekly pullback. So the structure has told you that price this area is for buy. So if price falls here, there are a lot of buyers who are willing to buy silver at this price. But it will pull you back during the week. During the week, Monday, Tuesday, Wednesday might pull you back, but Thursday, Friday will return you because this is a weekly candle. Every candle here represents for 1 week. So you see, this is a roof. You see the roof has been broken. Once the roof is broken, price came back to retest. A broken supply roof becomes a demand floor. So you see what we are seeing here for silver. I'm sorry to say it, that now look at the structure. When they broke the supply roof, price came here, forming as what? Demand. At this level, it's bye-bye. When he bought, he came down again, broke the structure, turned it what to supply and sold. Now he picked liquidity and broke the structure. He didn't just pick liquidity because this is an ascending trend line. We have an ascending trend line from this area, and the ascending trend line is broken. So it's like our last analysis on silver was wrong. Because looking at what silver is doing here, I don't know how it's going to buy. But let's look at it because market is dynamic and market can do whatever it likes. So let's not be in a haste to conclude. Now on a weekly candle, we are picking the body of the weekly candle, the body close of the weekly candle. Why are we picking the body? We want to see when there's break of structure, especially break of a body candle. Is the body I need. This is not daily. On daily, the chart is different. If we switch back to daily, this is going to be the most messy chart you will ever see in your life. If we switch this chart to daily, you are not going to like it. What we'll see is all disrespect and messed up structure. So when we go to daily, then our bias is different. Then we must have an idea of what weekly time frame has done. So that when we go to daily, we already have in mind what weekly has done because weekly hold a stronger bias more than daily. So when we go to daily, what we are looking for is a clean chart, but it doesn't take away what the weekly chart has done. So this is why most times we look out for monthly break and weekly break. Those hold a very strong price action. And just because they say it holds a very strong price does not mean it cannot be disrespected. Sometimes it means nothing. Sometimes it means absolutely rubbish. It doesn't mean anything sometimes. That is why you see analysis disrespected. So you see, at one time, the market begin to invalidate and disrespect analysis. Sometimes you allow it to balance. When a balance start respecting analysis, then you come in and take a trade. So you see what we have here. We have an ascending trend line. We have price creating here a demand floor, price creating a demand floor, price creating a demand floor, and outright breakout from the demand structure. And price has come to retest it. And it didn't even come to the roof directly. But you see from this floor, when price came here, it rejected. We already have a double structure, a bullish price action, and it has done well. It has done well. This is supposed to be a double bottom. A double bottom is a bullish price action. And price have moved. Came back to retest the neckline. This is the neckline. This is the neckline of the double bottom. And the price has gone on to create silver new all-time high, 34.724. We are going to mark it. That's the highest silver has gone. And we're going to take note of that time and it becomes our new sell zone. So in the future, we'll mark here as a potential bearish zone where if price returns here, silver sellers will might change their mind and they will not want to add more money and they will want to offload their premium, just to save their liquidity, hoping that they can push price down and buy back again. So he retested the neckline again, retested it. So on multiple, this neckline has held price. And unfortunately, in the month of December, the structure was broken and January came back for a test. Now the question is, will it continue to